Welcome to the Pump and Dump channel for the video. This time doing a transaction in the theoretical model portfolio. So the idea here is to sell some more safe bulkers and with the proceeds buy some silver core metals. I think in terms of the upside, it's maybe not necessarily going to increase the upside, but it's going to allow me to diversify the portfolio, and it's also going to maintain probably a similar type of performance in the longer term. So I mentioned in the last video when I was exchanging safe bulkers for Dana shipping that I was more positive on the Cape-sized vessels in the longer term, increasing relative to the smaller vessels. And as a consequence, I exchanged some safe bulkers for some Diana shipping. And I noticed today when I was looking at it that about 20% of the portfolio is, between these two names. So 20% of the portfolio being exposed to the dry bulk sector is, of course, probably enough, I guess. Even though in terms of oil and gas, I probably have 50%. But I wanted to bring in silver core metals because I'm feeling very positive in the near term that there will be a big move here with the earnings report. It's not a guarantee, but the earnings report I think is on the 20th of May, even though Yahoo says it's the 19th. And we can see obviously here the silver price is in an upward channel. The momentum has gone from an oversold 30 and it's getting close to an overbought 70. So there is, some movement happening here and it's drifting higher. The current price here, 571, I would say implies a 2650 silver price long term, and then taking another 10% of the stock price to get to this 571. So that's kind of what it's implying to me on the conservative side, but I think there are reasons to be bullish and look for a more aggressive valuation. And I explained this in my silver core metals video about how there are two types of valuation here for this stock that it has traded based upon in the recent past. And I believe that we can get towards that that higher valuation on silver core metals because the management has put out this presentation, or the company management obviously should be the same, this in April 2021, and in their presentation they are putting the projected 2021 and 2022 guidance for the production. And when I first analyzed the company, I was using the technical report, which is filed on CEDAR, and the projected production for the three main metals here, excluding gold, it's not mentioning anything about gold in here, are substantially higher than what was guided in the technical report for 2021. As an example, silver here is about let's say 200 to 300, 400,000 ounces higher than what is than was projected, and lead is about something like hard to say, I'd say 10 million pounds higher, and zinc is also about 15 million pounds higher. So it's a quite substantial increase relative to what was projected and what I based my valuation on. So I think here, going into the earnings report, there may be a point, whether it's immediately after the earnings report or a week later or 2 weeks later, there may be a scenario where the market becomes more positive because they see the projections are increasing, and if the company is able to outproduce what it was projecting to produce in the current quarter, then it will be seen as an earnings beat. Of course, there is a potential that that this metal production, this increase in metals production, is as a consequence of them underperforming their production guidance in the previous quarter, which could lead to a sell-off in the stock. And it could also be just that they're bringing forward later production that maybe a few years from now they were, or over the next couple of years, they were projecting to produce. They're bringing it into the current 2021 period. So those things, of course, are things to consider. But in terms of the stock price, I think it's already pricing in this kind of a downside. So I don't feel necessarily like it's a mistake to buy here. But yeah, that's the idea. I think in terms of the upside, I think 772 is possible. That would be a 35% increase from this amount here with safe because if I just bring up the chart to visualize this, we can see that we took out the 2018 highs here, which is of course also here low point and there low point. And then we could see it go towards $6 to $9, and if we just take the midpoint, that's about 750, which is, as a coincidence maybe, but it's about what I projected the fair value to be. So I do think over the next couple of weeks to months that safe bulkers is going to go into this $6 to $9 range, which would be I guess very pleasant, even though I won't have as much as I did before this transaction. I mean, I didn't have to do it, but I've decided to do it because it's going to allow me to diversify the portfolio. You can see here about 20% of the portfolio is in dry bulk shipping. I'll be adding, like just under 10% into mainly silver and lead mining company, which seems to be led by a very smart CEO. And yeah, I mean, this is where it's at. I mean, I do have about half of the portfolio exposed to oil and gas, but I think in terms of the size of Petrobras and PetroChina, these are very large companies. So you don't have this in dry bulk. You don't have like a dry bulk company that has thousands of vessels just floating around everywhere with a $50 billion market cap or something like that. You just don't have that. So yeah, it is what it is, and as a consequence, that's where it's at. So this is the thinking here. I think if the company can outdo its projections or raise its projections and meet its current production guidance, that would be seen as bullish by the market, and we would probably see an improvement in the sentiment, which would lead it to a higher valuation in the sevens, hopefully, or at least into the mid sixes. Of course, it does depend on what the silver price does going forward, but I mean, as I mentioned, it's 571, and that implies a 26.50 long-term silver price, and then take 10% off of that valuation to get to the current price here. So yeah, I think especially if we did break this upward channel to the upside, on who knows what kind of news could do it, that would be positive. Of course, there is the potential that after we've broken this uptrend here, that we are now in a downtrend here, and that this is just a bear flag. That would obviously lead to problems, and if we did break down into lower silver prices and it was looking bad, then given where the start price is, I could still get out and take a minimal loss. But it is what it is. You just gotta roll with it and hope that things that you assume to be so actually are. There is the case to be made that we could go towards a higher silver price again, into the 35, somewhere around here. I think that would be possible. I'm not one of the people who believe that 44 to 50 is a reasonable silver price at this point in time. I mean, it would be nice, obviously, if you're exposed to that on the upside, but if you're not, then it doesn't. I mean, the point is, it doesn't have to happen. There are enough silver mining companies that have enough value that they can survive at $20 silver long term. They don't need 40. They don't need 50. And that's just how it is. So yeah, I'm gonna end the video here. Remember, this is not investment advice, recommendations to buy or not to buy any of the securities mentioned here or not. It's always your choice. If you like them, if you know something about them, you want to buy them, it's always your choice, not mine. And yeah, gonna end the video, so have a good day.